Next guest says that housing is still trying to find its feet after the expiration of the homebuyer tax credit. He's Michael Gapen. He works on the Bloomberg Best Economics team. It's led by Dean Mackey over at Barclays Capital. He's also a former section chief at the Federal Reserve and an IMF economist. Mike joins us now from the Barclays offices in New York with more on some of the numbers that we got today. And those numbers still look pretty darn weak, Mike. What's your read here on what we're seeing on the housing market? There's been talk of some folks that the housing market is trying to find a bottom. Do you think we're getting there?
Well, first of all, Julie, thank you for having me. Yes, I do think the housing market is in the process of finding a bottom. As your previous guests have indicated, single-family starts were down. So although the headline number in starts was up, single-family was down again for the third consecutive months. We tend to view this simply as the fact that government stimulus in the housing market largely brought activity forward. So we're seeing some of that payback now. It's just difficult to guess and forecast whether the bottoming happens in July, August, or September. But what we would expect is in the coming months to find that bottom and then starts in the housing market to engage in a gradual recovery, one that is limited by the fact that home builders remain extremely cautious.
You know, we heard yesterday the Fed's loan officer survey that seemed to indicate that lending standards are thawing somewhat. As you just heard from Dom, of course, we've got mortgage rates at a record low. Why hasn't this already spurred not just refinancing, as he was talking about, but just more outright home buying?
Well, I think to some extent it has to do with who can qualify for that loan. If you have high credit standards, you're a good borrower, you have access to some of these low mortgage rates. However, there's a large section of the market out there that cannot access this low mortgage rate. They don't have the ability to refinance at these levels, and that's why I think some of the aid that's been provided to the housing sector, whether it be from the public sector or the Federal Reserve, has only been partially successful. I think we would view it as helping to stabilize and hold things in on the downside rather than push things upward.
And when you have unemployment still holding steady at the rates that we have seen, I mean, how is housing, even if you look into August, September, October, the end of the year, how is housing even going to rise from these low levels?
Well, I think the one thing that I'm going to be looking at is if you look at starts, so following up on the numbers that were released today, builders remain cautious. There's no question about that. The level of foreclosures in the pipeline remains extraordinarily high. However, they've cut back so much that the inventory of single-family homes has fallen to its lowest levels since the late 1960s. So it's possible to have a very gradual rebound in housing starts, but one that would still allow inventories to fall and remain lean. Therefore, home builders could be cautious but tiptoe back into the market in a more rational framework.
Mike, I want to get into the question of Fannie and Freddie, which, as we know, is being debated in Washington today. For Fannie and Freddie to sort of cut back on its participation, theoretically, the private sector would need to come back and be more involved in the mortgage market. Are we seeing signs of that happening?
At this point, we're really not. We're still seeing, in general, we've seen a consolidation of that market. So if you take a little bit longer view here, we had the shadow banking system where there are a lot of non-bank mortgage participation. That is largely gone at this point. We only have 4 or 5 very large private market providers of mortgages. They're very much connected with Fannie and Freddie at the moment. As you know, Fannie and Freddie account for over 90%, or at least involved with over 90% of mortgage originations at this point. So we have really a short-term, long-term issue right now. The housing market is soft. If you wanted to pull Fannie and Freddie back, you're only going to make the housing market softer. But longer term, the administration appears to be embarked on a cycle where they want reform of the housing market to reduce the extent and the influence that the public sector has there over time.
All right, Michael Gapen of Barclays Capital, thanks for talking about the housing numbers today and the role of Fannie and Freddie. Appreciate it.
Thank you. Happy to be here.